Thank you for joining me on another episode of Powerhouse U. Today we are accompanied by Mark Gross. Mark Gross is with CSSI Inc., which stands for Cost Segregation Services Incorporated, out of Chicago, Illinois. And Mark is joining us today to teach us a little bit about cost segregation, what it is, changes that are coming, and good time frames to study cost segregation. So, without further ado, Mark, let us know who you are and what you do.
Sure. Well, thank you very much, Jacqueline. I really appreciate this opportunity. And hello, everyone. As you indicated, I'm Mark Gross. I'm with CSSI. Over the last 20 years, we've completed over 20,000, actually over 30,000 cost segregation studies. I'm located here in Chicago. I've been with CSSI over 10 years, and I work on projects nationwide.
Perfect. And then I want to fix the last thing I said. I think I said cost segregation studying. I mean the time frame to do a cost segregation study. That's what I meant. So to move forward with the call, thank you, Mark, for joining us today. So to begin this conversation, can you tell us exactly what cost segregation is?
Sure, be happy to. When someone acquires a property, what a CPA will typically do is what's called straight line depreciation. We'll take a look at what is the cost of the property. You have to subtract the land from it because land cannot be depreciated. And the balance of what's left then gets depreciated straight line. Now, for most property types, that would get depreciated over 39 years. But for residential multifamily properties, or residential properties, it's 27 and a half years. So at the cost segregation, basically what it does is our studies will identify what are the pieces and parts of the property that can be depreciated faster, such as the parking lot is 15-year property, carpeting is 5-year, and a lot of other things. So as you can imagine, in today's inflationary time, the dollar today is worth a lot more than what it's going to be 27 and a half or 39 years from now, or even a couple of years from now.
Mm-hmm.
So what these studies do is gives you cash now that you can then use to buy other properties and invest in your properties or whatever you want to do.
Okay. All right. So, and then that is separating in cost segregation. You separate the land value from the building value, and it's the building value that depreciates.
Correct. It's the building value. Now, there's going to be some components of the building, such as the structural elements, that are still going to have to be straight line depreciated. So it's not going to be everything, such as your brick exteriors and some things like that are still going to have your 27 and a half years or 39-year straight line depreciation. But it's those components within the property which can have a shorter life, or not just property, the building itself, but in the, like I said, the parking lot, the landscaping, things of that nature.
Are those what is called bonus depreciation, or is that something else?
It works in conjunction with that. What bonus depreciation is anything which has a less than 20-year life. So, and it's not like we make these things up. It's all based on the IRS tax code. So just to give you an idea as far as what bonus depreciation is and when it came about, in the Tax Cut and Jobs Act at the end of 2017, that had a provision in there which talked about bonus depreciation for new acquisitions. It was in there prior to that time for new construction, but not for acquisitions. So since that time, we've been able to provide 100% bonus depreciation for anything with a less than 20-year life in the first year of ownership. And that came about from the Tax Cut and Jobs Act. And one interesting thing about bonus depreciation is that it's not prorated. So for instance, if you were to buy a property January 1st or December 31st, both of those would qualify for 100% bonus depreciation. And of course, any date in between. Now, something to be cognizant of is that 2022 is the last year for 100% bonus depreciation. it gets reduced to 80% in 2023, with subsequent reductions of 20% per year until it goes away. Now, there's the misconception that, oh, well, cost segregation is going away because bonus depreciation is, and that's not the case. We've been doing this for 20 years, even before there was bonus depreciation. So there's still going to be a lot of benefits to do depreciation faster, even when bonus depreciation goes away. But while it's here, we might as well take advantage of it because it's extra savings.
Okay. So, just for my knowledge, in comparing the cost segregation to the bonus depreciation, you said cost segregation covers the building and the bonus depreciation covers like miscellaneous?
Well, it's anything with a less than 20-year life. So it's going to be a lot of your, like I said, the parking lot with 15-year, carpeting with 5-year. You're going to have your moldings, things of that nature.
Mm-hmm.
So there's going to be a lot of elements within the property that can be depreciated faster with the bonus depreciation. And that's kind of taken the place of a lot of the cost segregation right now. But
Mm-hmm.
when that starts being diminished, then we'll be doing more of just the standard cost segregation in future years, where you can depreciate carpeting over 5 years. But right now with
Okay.
bonus, you can do it the first year. So it's kind of like cream on the top right now.
Okay. So cost segregation doesn't necessarily separate the building from the land because there are portions of the land, i.e., the parking lot, that you could include in the segregation study.
Well, you have to take a look at what's the land value, and that would be really the raw land, or
Mm,
the improved land you have there, which would not include like the parking lot portion of it, because the parking lot portion of it you can depreciate over 15 years,
mm,
but typically it's probably around 15-20%, I would say, on average. You might have some parts of the country with high land values, such as Southern California or Manhattan, New York, or some of those areas, where you might have land values which is 40-50% or more of the purchase price. But in most areas, this might be in the 15-20%, and some, especially in the tertiary markets.
okay. So when looking at cost segregation, when do you say is a good time to do it, and when is a bad time, or would you not recommend doing a cost segregation study?
Sure, great questions. I'll take the second one first, as far as when it's not a good time to do a cost segregation. And one of the pre-qualifying questions we ask is, are you planning on selling the property, or you can be flipping it within 5 years? There's something which is called a recapture tax. And if you're planning on buying it and then selling it within, 1 to 3, 4 years, it may not be a good thing to be able to get that extra cash because of the recapture part of it. So we ask that. Usually when you're in the 4 to 5 year or later, it's not going to be an issue. But we want our clients to be cognizant of the fact that there is the recapture tax, so they don't. So that's just so they're aware of that. And what was the first question again?
A good time and a bad
Oh,
time. So you answered the bad time, and now the good time is if you're holding it more than 5 years, right?
correct. But you think about it, what's a good time of year to be able to do that? And
Mm-hmm.
some people say, well, should I do it before I buy the property? Should I do it right after I buy the property? And the answer is, we don't suggest that you start a project until you actually own it, because we all know that, the 11th hour of having a property under contract, that something may happen, it might derail the transaction, you may not get it. So what's the point of spending something on a study that you're not going to actually own?
Do people really
However,
try to do the study before actually owning the property? They try to start the cost segregation?
well, that's a question that they ask. And what I'll say is that I will provide you with a free preliminary analysis of the estimated savings and the cost of the study beforehand. But let's not actually do it until afterwards. And I don't know that people pretty much understand that it doesn't make sense to be able to do that. But then as far as the timing is concerned, you want to make sure that you get this done in time to be able to file your taxes. Now that's going to vary depending upon when you close and what part of the calendar year. I have clients right now that are looking to close this month, next month, in December. The closer you get to the end of the year, you really want to get that project started as soon as possible if you want to file your taxes in the spring, because it takes quite a while. It takes maybe 6 to 8 weeks to be able to get that study completed. And the CPAs don't want to get the paperwork at the 11th hour just before, the taxes are due. So, but then I have other clients that especially the ones that are not syndicators, they frequently will extend their taxes into the fall. So let's say you buy something, it could even be in January of 2022, but you're planning on extending your taxes until the fall of 23. Well, if that's the case, you don't actually have to have the study maybe started until the summer of 23 in order to get it done in time. So the answer is it really depends on what your unique circumstances are, but make sure that you have plenty of time to get it done prior to the tax time. And I'll mention another reason why it may not be a good idea to get a cost segregation study is, let's say you already have a lot of losses on the books. And if you already have, say $1 million or whatever it is of losses that are being carried forward year after year, what good is it going to do to have an additional loss? So that's one of the pre-qualifying questions we ask as well. And that is, can you use the extra deduction?
Okay, which makes sense. And then what led me to you is actually I was doing a Q&A section with a gentleman that he's a tax accountant, and he did mention that when filing taxes, they work very closely with people that do cost segregation studies. So it's pretty much, do you, as the cost segregation specialist, do you work hand in hand with the tax preparer, with the IRS, or how's the structure when you do these
Sure.
transactions?
Well, first of all, I get a lot of referrals directly from CPAs because they want to utilize these studies for their clients' tax returns. We do not do tax returns, so we're not in competition with the CPA. We work hand in glove with them. What we do is provide the information that they can utilize for their clients' services. And there are some CPAs that are really well versed in real estate and they understand everything about it. And we just send the study results to them and they applied it and we never hear from them again. There's others who maybe aren't as familiar with it, and we really need to kind of hold their hand and walk them through the process and identify, what it is they need to do with the information. And we don't charge any extra for that, but that's one of the services that we provide.
Okay. And then when doing a cost segregation study, does the size of the building matter at all, or just if you own the building and it qualifies, you do the study?
Yeah, it really, there's a fairly low threshold as far as what will make sense from an economic standpoint to do a cost segregation study.
Mm-hmm.
And the rule of thumb I typically use is $500,000 or greater, excluding the land value. Now, I've done some that are less than that, especially when you get into single family rentals. We can maybe do $250,000, $300,000, excluding the land value, but it's a fairly low threshold.
Mm-hmm.
Typically isn't going to be a problem unless you get in some, tertiary markets.
Okay. And then a question I definitely want to ask you is when I heard about cost segregation or cost segregation specialists, never knew it existed. So a question that I definitely want to ask you is how did you get involved in this arena? How you like it? And if anyone was to do the same thing, what would you recommend?
Sure. Well, first of all, prior to that, in prior lives, I've been involved in upper management in manufacturing companies in a retail chain, overseeing a lot of supply chain activity and just overall operations of things. However, the last over 10 years now, I've been with CSSI, And the way I kind of got introduced to that was I was first of all involved with doing some loan brokerage work. So getting into the real estate arena, understanding how that works, and then became aware of cost segregation and thought, this is a wonderful tool for people who own commercial real estate to be able to reduce their taxes, be able to increase their cash flow. And it was something that I just enjoyed helping people save money.
Mhm. And this is a year-round job, right? You don't just do it around the time that tax season comes in. You're not like a tax preparer. You actually do this job, what is it, however many days of a work week it is to get this job done. So you're available throughout the year, right?
Yes, that's correct. However, it is seasonal in nature as far as when the big rush is going to be just prior to tax season.
Mm-hmm.
Because human nature, unfortunately, is that people will procrastinate and that you won't get things on time. And then they'll come to you at the 11th hour and say, okay, I have these projects I really need to get done. Can you get it done? And sometimes we can, and sometimes we can't. We try to squeeze in as much as possible. But one thing we do is if we make a commitment that we're going to be able to get this done, we will. Because what we're doing is we're dealing with thousands of studies from all around the country. We have to coordinate the site visit. We need to have the engineers spend, weeks going through all the photographs, the appraisal and the blueprints and, all the information for the property. So it's a very extensive process.
Yeah, which was actually going to lead me to my other question because when we talked earlier, you mentioned that even though you're in Chicago physically, you guys are pretty much around the US. So you have boots on the ground everywhere, and they actually have to physically visit the property in order to do the cost segregation inspection, right?
That's correct. There'll be some people that say, well, I like to save some money on this study. We don't want to have a site visit done. And we'll just say, I'm sorry, we're not the provider for you, because 100% of all of our studies will have a physical site visit.
Mm-hmm.
You're right. We do have boots on the ground throughout the country. We've done studies in all 50 states, and each study will require someone to go to the property to take photographs, hundreds of photographs. When the engineers are reviewing it, they'll zoom in on it and say, well, what model security camera is this? I mean, it gets to that detail of level. It's quite extensive.
Wow. So you actually have to pay attention to what you're doing when you're taking the pictures. Do you guys come with a checklist and make sure you get everything, or you guys just go around and just take pictures?
Well, there's a checklist. Because I do them all over the country, I typically don't do any that are outside the Chicagoland area.
Hmm.
But if I do it, because I'm cognizant of what needs to be done, I pretty much know
You
what
already
remains
know.
to
You've been
happen.
doing it for years, huh?
But but you do need. There's a certain position of where in a room you're supposed to take the picture. How many pictures do you take, and what are things you definitely want to take a picture of, and things of that nature.
Okay. And then when you do the cost segregation studies, do they come back to you in booklets this big or this small or PDF
Well,
files?
you're right. PDF files, and in today's electronic age, nobody wants the paper anymore.
Nobody wants the PDF either.
But we have to be able to provide the documentation that the CPA can use to be able to supply that. And the other thing I'll mention too, the reason why we do a site visit is that part of our fee and our analysis is that we will defend the study at no cost in case a client ever gets audited by the IRS. And in order to do that, we have to be there physically on the ground to take hundreds of photographs, to have all the documentation that's going to be required. And we've never had a study trigger an audit. We've never had a study overturned. So we really have a perfect record in that regard.
Congratulations on your perfect record. And
Uh,
then is it when you guys do the cost segregation study, that makes you guys like the go-to person for the IRS? You're the middleman instead of the tax preparer?
no, we provide the study for the CPA, who will then
Mhm.
put it in the tax return and send it to the IRS.
Right.
The only time we would get involved down the road is maybe the tax preparer may have some questions about something. We can do that. But if there's ever is an audit, and quite frankly, that it's not a high percentage, but a lot of people feel that with the IRS now adding about 80,000 more auditors, that there's going to be a lot greater chance of being audited in the future years than there has been in the past.
Oh, okay. Well, duly noted. All right. So before I let you go, is there anything that you wanted to add it to the call? Any tips or anything you want to give the people?
Sure. One thing I'll mention is that if you're familiar with 1031 exchanges, where if you have a property and then you sell it and buy another one to avoid the capital gains, you can actually do a cost segregation study in conjunction with that. So that works well with it. It actually works well with really any property type. I do a lot with triple net lease properties such as a Dollar General store, auto parts, banks, CVS, Walgreens, things of that nature, but also multifamily. An interesting note I mentioned earlier is that you can't depreciate the land, but you know what one good property type is a golf course. And you think, what? How's that possible? Because a
Right.
golf course is land, right? How can you do that? Well, what does a golf course have on it? It's going to have a parking lot. It's going to have landscaping. It's probably going to have a clubhouse. There's going to be a lot of infrastructure there that our studies can actually help. In fact, another one I'm working on right now is an RV park where there's not a lot of structural buildings, but there's a lot of other, amenities and things of that nature. So
Mhm.
that can be a good one too. So the way I mentioned is that you can really probably make a case of doing cost segregation for any property type. And so I'm available to do that for any property nationwide, all 50 states.
Interesting. Which actually led me to another question. Give me 2 seconds to remember it, if I can. Cost segregation. Uh, we're going to get back to it. 'Cause I'm trying to remember right now. We were talking about cost segregation and that's horrible. Right here on camera too. I can't even remember the question. But
Well, I'll mention another thing too, and that is that this is a dynamic environment. And that
Mhm.
is that things change over the years, and the tax rules and guidelines change over the years. And like I
I
mentioned,
rem- I
I'll let you
remember
go ahead
now.
and do that before I finish. So
I was going to ask you when people own property, is it pretty much like a necessity for them to have the cost segregation study or is it optional?
it's optional. A
Mhm.
lot of people, I shouldn't say a lot of people, but I'd say probably most people who don't do it maybe aren't cognizant of it, or maybe
Mhm.
they're planning on doing, like I mentioned earlier, they're planning on doing a flip on it, whereby it wouldn't make sense to do that because of the recapture tax. So if you even if you haven't done it the first year of ownership, you can do a cost segregation study in future years. It may not make sense to do it if you owned it for 15 or 20 years, but let's say you owned it for a few years. The only thing you need to do is tell the IRS that I used to do straight line. Now I'm doing cost segregation. There's something called a form 3115 that needs to be filled out in order to accommodate that.
All right, your turn. You answered my question. Thank you.
You're welcome. Now I'm trying to remember what I was supposed to talk about.
Let me know when you remember. All right. Well, we're about to close out. You remember?
There's been so much and there's so much information. I would just say, reach out to me if you have any questions. Be happy to see if we can provide any guidance for you. And one thing to be cognizant of too is that when you're doing renovations, that's the other thing I wanted to mention. If you're doing capital expenditures on a property, you want to be able to identify what that is as well, because There's, when you're throwing out something, there's ways in which you can depreciate the disposal costs and removal costs and things of that nature, and we can help you with that as well.
And there you have it, everybody. Cost Segregation Services from Mark Gross and Jacqueline Harris. Both of us Q&Aing here and forgetting what questions we're having to ask and answer. But anyway, without further ado, I would like to thank you, Mark Gross, for being here with us today. This is another episode of Powerhouse U with more episodes to come. And we appreciate you for coming, stopping by, and we'll see you again soon.